Ladies and gentlemen, good day and welcome to the Muthoot Capital Q1 FY23 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vidhi Shah from Antique Stock Broking. Thank you, and over to you, Ms. Shah.
Thanks, Mike. Good afternoon, everyone. We have with us the management of Muthoot Capital Service Limited, represented by Mr. Madhu Alexis, who is the Chief Operating Officer, and Mr. Vinod Panikkar, who is the Chief Financial Officer. Without further ado, I shall now hand over to Mr. Vinod Panikkar for opening comments. Over to you, sir.
Good afternoon, everybody. Nice being on the call with all of you once again. We would want to present the financials of the first quarter of the current financial year. We have seen some bit of improvement in the current quarter compared to the previous quarter, and we are very happy to present the financials to you. The current quarter had a total disbursement of about 328 crores. Versus about 136 crores in the same quarter last year. But then that was a quarter when for about roughly 2.5 months we didn't have too much of business. Against the immediately preceding quarter we were slightly lower, but then in the immediately preceding quarter there was other loans of roughly about 47 crores. Otherwise the retail loans were slightly higher than the immediately preceding quarter. Then it was about 321 crores, this time it's about 326 crores. The AUM has started seeing an increase over the last 2-3 quarters. It is currently at about 2,082 crores versus the 2,049 crores in the immediately preceding quarter and about 1,964 crores in the same quarter last year. The interest income also has been mainly it has been more or less in line with the immediately preceding quarter. It was about 108 crores in the immediately preceding quarter. Now it was at about 106.4 crores. Versus about 98 crores in the same quarter last year. The current quarter has seen a lower income. This is a couple of crores of reversals that we did. That was number one. Number two was the 107 crores in the immediately preceding quarter had roughly 2 crores of interest income from deposits that we had placed with banks. That piece was not there in the current quarter. So that is otherwise on the business front it was more or less equal to the immediately preceding quarter. The finance expenses have been lower in the current quarter at about 32.7 crores versus about 34 crores in the immediately preceding quarter and close to 40 crores in the same quarter last year. Against the same quarter last year, it's a lot to do with the reduction in the utilization of about roughly 170 odd crores versus the same quarter last year. And some bit of interest cost reduction in terms of which was passed on by the lenders too. It was roughly 7 crores. Reduction was partial about 6 crores and about 1.5 crores. That is how the thing was split between lower utilization and lower interest cost. In the immediately preceding quarter, it was slightly lower, mainly on account of lower utilization of roughly about 60 to 70 odd crores, 68 crores. But the interest versus the last quarter has gone up. So that had an impact of about 17 odd lakhs, and 1 day extra in the current quarter meant an increased cost of roughly 34 lakhs. So all in all, but it was lower, bringing the net interest income to about 73.7 crores versus about 58 crores in the same quarter last year. Operating expenses was at about 44.5 crores versus the 27.2 crores in the same quarter last year. But in the same quarter last year, there was because of COVID, there was not too much of activities, lower sourcing cost and definitely negligible collection cost because collection was also pretty bad in that quarter. So therefore, these were the two main differences. Loan loss provision has been at about 9.4 crores, a combination of loss on sale of repo, which was about 6.7 crores. This is the reduced NPA. There should have been a reduction of roughly about 4 crores. But we decided to make an additional provision of roughly 6 crores in the against the accounts that we have in the NPA. This is which we had a total cost of about roughly 9.4 crores, bringing versus 50 crores in the same quarter last year, and the colossal 35 crores in the immediately preceding quarter. But then that was mainly because of two large provisionings which we did to meet RBI norms. This led to the NPA, the profit before tax to be at about 19.8 crores and a profit after tax of about 14.3 crores versus a loss of 19.5 crores in the same quarter last year, and a loss of about after tax of about 14.5 crores at the same time last year. Again, in the immediately preceding quarter, like I mentioned, because of the additional provisioning, we had reported a loss before tax of about 204 crores and a loss after tax of about 153 crores. We are seeing NPA reducing. That was only the large issue that we had last year. We are seeing improvement on the ground in terms of customers coming back to the dealer point, and all these things together will help us, I believe, in getting back to where we were in the pre-COVID stage. And barring, God forbid, if something of COVID comes up, that's the only challenge which we see. Otherwise, we don't see any operational challenges as such in the current financial year, and we are fairly hopeful that we will go back to the pre-COVID kind of levels in terms of AUM, in terms of profitability, and we will, on a quarter-on-quarter basis, exhibit that before you. Thank you. I would now ask Madhu to give his comments before we hear from you and address the same.
Good afternoon, and thanks once again for joining us on this call. I'll also briefly dwell around what is happening in the market, and then probably in the Q&A we can have sharper discussion on any of the points that needs to be clarified. I think from the industry perspective, what we have seen is that the wholesale that is happening for two-wheelers is kind of stabilized over the last 4 months. We have seen it is hovering around 35 lakhs per quarter. Q1 was about 36.66 lakhs, which was about 33.48 during Q4, and just a quarter before that, that is Q3 22, it was 35.8 lakhs, which I believe is a very good sign because despite all the headwinds, I think it has reached a level where it is kind of stabilized. On a month-on-month basis, 12 lakh is something what is happening wholesale, and the tough part of this year, that is monsoon, is about to get over, and our confidence on the growth of two-wheeler market is very high with the festive season, like Vinayak Chaturthi is ahead, Onam is there next month, and of course generally from Q2 onwards the industry looks much better compared to previous quarters. The retail numbers that was around 35.3 lakhs, which was about 31.6 lakhs as far as Q4 22 is concerned. Retail registration numbers have seen it has been slightly inconsistent in trend. Could be high petrol prices, inflation, and you people know much better about what is happening in the global market in terms of inflation, interest rates, and things like that. But again, and this I keep on repeating, that with the reopening of schools, colleges, and revival of, or rather removal of work from home facility, All these are kind of improving, and we saw that trend in Q4 as well, in terms of better walk-ins at the dealer point. So at the ground also, we see that there is a lot of movement as far as customer inquiry and walk-ins at the dealer point is. And so we believe that retail sales is supposed to stabilize and grow in Q2. And the only thing that would pull back this is the fuel prices, because these vehicles run on petrol. So besides that, I think we see a very positive quarters ahead as far as sales is concerned. From MCSL perspective, I think Vinod dwelt also on that. We were about 293 crores, which is about 37,000 units. And also we have seen good contribution from our MFL branches. Close to 14% of business has come through the branches, which is a very positive sign, and we are seeing a huge support from that side whenever business is impacted. We also have analyzed the portfolio length and breadth of it, and the portfolio after the first lockdown and after the second lockdown, whatever business we have done after this, we are seeing a very robust portfolio. So another confidence level as far as two-wheeler business is concerned. While the top line should definitely look up, whatever corrective measures we have taken after the first lockdown, after the second lockdown, and weighting that risk into our credit parameters to take care of COVID impact and things like that, we are confident that portfolio is going to behave in a robust way, and that the data tells us. Of course, I mentioned about festive season, so we have already tied up with all the dealers that we had been doing business over the past many years. When the festive season comes, already the marketing activities are lined up. It is business as usual for us as it was during the pre-COVID levels. I have mentioned earlier also, in terms of schemes, in terms of distribution and reach and things like that, we are calibrated across the country. All the schemes to target specific segment of customers with a good risk, those are there in place, which would help us to continue to have a good and robust portfolio. Looking at the macroeconomic fundamentals, I think the MSP rise for Kharif crops announced by government, that should augur very well for rural sector. I think Q1, one of the factors for two-wheeler not picking up was the rural growth, but I think that would get addressed with this particular issue. And so during the upcoming quarters, I think even the rural belt, which was impacted, should really look better. So this is the overall picture that I thought I should share with all of you, and if there's any specific questions, we'll address during the Q&A. So let me request Vidhi to kindly open up the call for the Q&A session.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We take the first question from the line of Uttam Purohit from Perfect Research. Please go ahead.
Hello.
Yes, Mr. Purohit, you may go ahead.
Yeah, I might have missed some initial comments. Can you please tell me our disbursements have been reduced sequentially? Can you throw some light there?
Yeah, the disbursement sequentially, good afternoon. Disbursement, we said that in the immediately preceding quarter, the retail disbursement was about 321 crores, and in the current quarter it was about 326 crores. So the overall disbursement in the immediately preceding quarter was about 368 crores. Versus about in the current quarter it's about 327 crores. There is, I would say, in the current quarter, like I said, that on the retail front.
Yeah.
Sorry. I'm sorry. So in the current quarter, the disbursement on the retail front is broadly in line that it was in the immediately preceding quarter. March quarter being a quarter where there's a lot of activities happen. So I think in the current quarter, normally in the first quarter, we don't see too much of disbursement, but we are fairly. It's in the second quarter when we have Onam and then the other festivals which come up, where we would expect a much larger jump in the disbursement.
Okay. So, sir, since we are back track on terms of ROE and ROA at an improving trend, can you throw some light on our long-term targets to achieve, let's say, in 3-4 years?
I would possibly take the current year and then talk about the next year. 3-4 years, with so many things which keep changing on a rapid basis. In fact, last year we were done by the 2 RBI circulars which came up. I may not want to take that route. But definitely we intend to be where we were in March 19 in terms of AUM by the end of this current financial year. So definitely that which was at about something like 2,750 odd crores. So we are fairly confident that we should be closer to that by the end of this current financial year. We expect it to be in the 3,400, 3,500 crore range in terms of AUM by FY20 end of FY24. So I would say that's the AUM target that we have on hand with us. We have currently tried to do our estimation for 2 years at a time. So 4 years we felt was a bit too much because so many things keep changing on a rapid basis, and we didn't want to take the risk of committing or doing only figure for more than 2 years now.
Okay, so our expected AUM for the FY23 end would be 3,400 or 3,500 all crores, right?
No, I said FY23, I said it was about 2,750. I said it will be in line with my FY19 number.
Okay, pre-COVID levels. Okay, sir. What are our strategies to keep the NPA in check going forward, and any chances to reduce it further?
Actually, the intention is to reduce the NPA on a month-on-month basis. See, because we have adhered to the number circular, and where the NPA goes out of NPA because the standard account only if the entire installments are collected. The reduction from the NPA and becoming a standard is a much tougher job today. I will explain that to you how. Earlier, if an account was in the 90 plus, collecting one installment was good enough to take that guy out of NPA. Today, that one installment doesn't suffice. You need to actually collect at least 4 installments to actually take that guy out of NPA. In fact, we have been, therefore, while the collection from these accounts, the soft NPA, we use the terminology soft NPA of accounts which are in the less than 90 BPD category. From those, we are getting collections on a month-on-month basis. This is on the website. In fact, one of the slides that we have put up on the website is the movement over the on a quarter-on-quarter basis of the NPA, the last 5 quarters. And you would see that in the last 2 quarters, ever since we actually recognized less than 90 also as an NPA, or you will see the collections from those accounts are significant. From the 8-9 crore which was getting collected without the account moving out of NPA, the last 2 quarters have seen a collection of 36 and 32 crores respectively. So actually saying, still that account is not going out of NPA because the regulation says that you have to collect all the 4 installments. So the overall number of NPA going down will happen, but then it will happen in a, I would say, slow manner. But then on an overall basis, the portfolio quality will keep on improving. And then we are talking about out of the 502 crores of NPA that we have reported at the end of the quarter, there is about 128 crores of NPA. It was at about 149 crores at the end of March. 128 crores where the account is less. So while we have to call it as NPA because the regulation demands so. We need to give consideration to the fact that we are less than 90 and sellers are paying on a month-on-month basis.
Okay, sir. Thank you so much. I'll get back in the queue.
Thank you, sir. Thanks for being on the call.
Thank you. We have the next question from the line of Jatin K from RA. Please go ahead.
Hello, sir. Congrats for the set of numbers and for coming back into profits also.
God bless actually. Thank you.
Sir, my first question would be on the credit cost. So in our income statement, we have put an impairment on financial instruments that is 9 crore and 40 lakhs. And in the PPT, we are saying out of this 6 crore is kind of one-off. So can you please explain what is this 6 crore and what is our plan for FY23?
Jatin, thanks for being on the call. Historically, when pre-COVID, when we were doing reasonably good business, good collection, our credit cost used to be in the range of 2.25%. In the current quarter, we are expecting substantial amount of reversals which would happen from the soft NPA, which is something which I mentioned, which currently end of June is about 128 crores. In the current quarter, the reduction in the soft NPA was to the tune of 20-odd crores, 21 crores. We are hoping that over the next 3 quarters, major part of the 128 crores go away because the collection against that is much easier than the harder NPA, which is 90 plus. And therefore, I would say in the current quarter when our cost is at about 2.29%, if what we are planning that actually gets fulfilled, we would I would say we could possibly see the net credit cost, net of all the reversals, to be in the range of about 1% also. Maybe it could be or maybe lower.
So, sir, only 1% credit cost for this year net of the reversals.
Yeah, that's our target, that's our plan, and we are thoroughly hopeful that we will work towards it and achieve it.
That's very good to know, sir. And sir, next question would be on in the PPT you are saying total sanction in hand as on 1Q FY23 is 1550 crore. Can you explain what is this number, please? Can you hear me?
Jatin, I request you to just repeat the question, please.
Sir, on slide number 3 in the PPT, you are saying total sanction in hand as on 1Q FY23 is 1550 crores.
Right.
So what is this, sir, sanctions on hand?
It is that is also it's the combination of all the facilities that have been sanctioned by various lenders, and it's a combination of what comes to us by way of WCDL, CC, NCD, term loan, all put together. It's the total sanctions that we have on hand is about 1550 crores.
This is the money we have taken from the financial institutions?
We have got sanctions from them. We would have taken some of it we would have not taken. It's a combination of both.
Sure, sir. And for what is our disbursement target for this year?
We hope to be at the figure that we were in the at least in FY20, which was about 1750. It should be around 1750. That's our target.
So you're saying 1750 crore disbursements, 2700 crore AUM and only 1% credit cost for this year.
Yeah, I also said that the 1% is basis the reversals that we are paying, because in the current quarter the reversals was in the range of about I would say about 20 or crores, and we are actually making a provision. We have made a provision of close to 80%. So a lot of it that would get reversed in the current quarter, depending on how the NPA numbers come down.
And our net NPA now, sir, is 5.2%, right? So what is our target for net NPA by the end of this year?
Net NPA at about 5.2% is a lot to do with the provisioning that we need to do and the comfort that we can give to the lenders. So I would say that lenders would be comfortable if we are at about 4%. So we will work towards that. In the past, our net NPAs have been lower. It has been in the 2.5-3% range. But I'm sure if net NPA is at about 4%, we could give a lot of comfort to the lenders. And currently, the intention is to give comfort to the lenders.
Sure, sir. And we reported 15 crore of net profit after tax in this quarter. So what any guidance you would like to give on that front also for the full year, given all this our targets?
I would possibly wait for the second quarter, because this is possibly the biggest quarter that we have, or because open season is in this quarter. We would be more comfortable giving a guidance, and we do have a budget which has its and this is that I told you that we are looking at a book of about 2750 or so, and a disbursement of about 1750 or so. This is that my assumption is we should be in the range of where we were in the pre-COVID level in terms of guidance to the bottom line.
Sure, sir. Thank you and all the best.
Thanks, Jason.
Thank you. Participants who wish to ask a question may press star and 1 on your touch-tone telephone. Participants who wish to ask a question may press star and 1 on your touch-tone telephone. We have the next question from the line of Rishikesh from Robo Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first is that since you have given a very strong disbursement target this year, ranging around 1,700-1,800 crores, which we saw in pre-COVID levels also around 2019. But during that period, sir, the two-wheeler sales were upward of 2 crore that year. Okay, so I wanted to know what is the basis for such a strong guidance. Okay, are we seeing a robust two-wheeler sales that you are seeing happening this year, or what? Can you please explain?
On the guidance or the two-wheeler sales, I think Madhu will possibly talk about it. But then that time, you need to understand that the vehicle cost was in the range of 75,000. Today we are talking about the vehicle cost in the range of about 100,000. So I think that itself has increased the cost. But my request is if you could add on this.
I think so. The key here is that in terms of, I mentioned during my opening as well, in terms of distribution and in terms of the branch network that we have through our Muthoot FinCorp branches, close to 3,500 odd branches are there. I think all this distribution network would really contribute to this journey. While the two-wheeler sales during the pre-COVID, let's say 2019, was 2 CR plus, and there can be an impact On the, whether the industry would have the same numbers, we really don't know. But from COVID levels, definitely we are seeing there's a huge improvement. And what we believe is that wherever we were present and the good markets or strong markets where we were, actually we had been gaining grounds in those locations. So very clearly when we have budgeted, we have looked at the dealer point level, at the location level, at the pin code level, we have budgeted this time. Because we know that industry may not be like what it was earlier, but definitely it would be growing from whatever it was at very low levels during the COVID times. We have that understanding that industry would be under pressure, but definitely we have the opportunity to go across all the places, and especially non-south locations. Some 2018-19, we were very gung-ho that we would be able to penetrate in those markets. We were successful also, but after the COVID, we had to consolidate our position, which we believe that we'll, very strongly grow in these areas as well. So our unfinished agenda, which was around 2019 and end of 2020, I think that is something what we'll pursue this year, and that should enable us to get our numbers that we are seeking to. In terms of our Muthoot FinCorp branches, that is a big opportunity that we have. We can grow that back like at 2018-19 levels. That's the confidence and the kind of support that we get from our flagship company. We have worked on a lot of initiatives, how we generate business from there. So these things taken together should really help us grow our numbers. And there is no gainsaying the fact that, we are looking at a slightly higher market share what we were earlier. Action is towards that. Another important thing is we are mostly in tier 3, tier 4 centers, rural centers, and we are confident that even that sector should really grow well. Last couple of years we saw that those areas also going down, but we are very confident it would bounce back this particular year, and we are seeing there are positive signs in those markets. So market by market, location by location, when we analyze that, we are confident that these are the numbers that we should be chasing, and irrespective of how the industry goes, and I'm confident that industry should bounce back now on, except for the fuel prices and inflation impacting people's pocket. But definitely it's a basic, I keep on repeating this. This is a basic commuting thing for our country, and if you look at the penetration, this is about not more than 100 two-wheelers for every 1,000 people, which is very low compared to the other developing countries. We should look at twice, like 200 two-wheeler per 1,000 people. That is the level that India can reach, and when that happens, are we there or not? So it's a basic commuting, and one of the, even today, most cost economic transportation for most of the population of the country, and especially in the tier 3, tier 4. So that's the opportunity that is there. The opportunity is huge, and I think past is past. We should look. We have very confidence in the future of this product.
Okay. Thank you for that explanation, sir. So one more question that I have. Can you provide us the slippages number for this quarter and what they were in pre-COVID Q1?
What number?
Slippages number, sir.
Slippages number, I think slide number 23, we have actually given the slippages. Slippages in the current quarter was lower than the slide number 26, sorry, not 23, 26, because of it's about 56.91 crores. In fact, the caveat is that the number includes accounts which would have possibly gone beyond 90, come below 90, but not gone to zero. So that's about 56.91 crores, which was about 20% lower than the immediately preceding quarter, which was at about 68 crores. And before that, the quarter before that, it was at about 61.72 crores. The quarter before that, it was 69.59 crores. So just to give you a feel of the last 4 quarters, including the current quarter.
Okay, sir, no problem. Thank you very much.
Thank you, Rishikesh. Thanks for being on the call.
Thank you. We have the next question from the line of Naveen Jain from 3N International. Please go ahead.
Hello.
Good afternoon, Naveen.
Yeah, good afternoon. I want to know, like for 3 years, what are we hitting as a growth target? Any 15% per annum? Any growth targets?
I think I answered my friend Jatin some time back. I will repeat it once again. We said that we would possibly want to talk about 2 years right now. And I said that we hope to end the current year at about 2750 or so, where we were at the end of March 19, and roughly about 3400 or so by FY20, end of March 24. That's what I had said. We have not said 3 years. I said only 2 years. So I think if for 4 years, we said we currently speak about 2 years at a time.
Okay. And my next question is how are the collection efficiencies are improving?
Yeah, actually, collection efficiencies have improved significantly. In fact, we have put up a slide. I mean, we have not put up a but it has been, in fact, the hypothecation loan collection has been in the range of 100% plus against monthly billing. And it continues to be so in the current quarter as well. In the current quarter means the July-September quarter as well.
Okay, 90 plus collections, what is the figure?
90 plus collection is improving. In fact, of the 100 rupees that are collected, roughly about 11 rupees get collected from 90 plus. In the current quarter, in the immediately preceding quarter also, it used to be significantly lower before that, 9%, actually 3% was the collection. So I would say it has improved, and we expect that collection to improve further.
Okay. Thanks a lot.
Thanks, Naveen. Thanks for being on the call.
Yeah, thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Vidhi. Please go ahead.
Yeah, thank you. Sir, so just to mention that we saw 20 crore reversals this quarter. Is that correct?
Vidhi, this is the operator here. We were unable to hear the complete question. If you could repeat the same.
Yeah, I'm audible now.
Vidhi, your voice is breaking up.
Is this fine?
Unfortunately, it's not. Vidhi, we'll call you back. Management request you to please stay on hold as we reconnect Ms. Vidhi on the line.
Hello.
Over to you, Vidhi.
Yeah. Firstly, just to confirm, did you mention that
I don't think I heard anything. If you could
Vidhi, yes. Your voice is still breaking up, Vidhi.
Maybe take the phone into your hand and speak. You can speak up.
Yeah.
Vidhi, can you hear us?
Yeah. Am I audible now? Better?
No, Vidhi, we are still getting a very muffled voice from your line.
Just one sec. I hope it's fine now.
Much better.
Yeah. Sir, just wanted to understand whether 20 crores of, did we see some 20 crores of reversal in provisions this quarter?
20 crores of reversal in quarter. No,
Yeah.
I said that soft NPA went down by about 20 crores.
Okay, soft NPA went down by 20 crores and we see the 128 crores of NPA going down.
What has moved out of NPA is about 21 odd crores moved out of NPA in the current quarter. 9 crores additionally went down by way of sale of repossessed assets. So altogether roughly 30 crores actually went down in terms of NPA, and another 32 crores went down by way of collection, but the account continued to be in the NPA. That means you would have collected the money partially, but not the full amount. In one of the queries, I had actually mentioned that ever since the soft NPA became an NPA, there is some challenge because you can't collect all the 4 accounts or 4 EMI. So that continues to be an NPA.
Okay, so if you can give the breakup of the provisions for this quarter, like what is for standard, how much is for NPA, the breakup of 9 crores of provisions that we have made, if you can give a breakup of that.
Madam, can you share that after this call?
Okay, sir, no problem. Sir, secondly, on the cost to income ratio, so do we expect this to be around 60% for the year, or do we expect it to come down?
We expect this to come down because we expect the incomes to go up. Therefore the net interest income should be higher, and therefore this cost includes a lot of fixed costs, and therefore we expect it to come down. In the last in normal years we were in the 52-53% kind of range, so we should possibly go back to that level, 50 to 52%. Let me put it that way. As we improve when the top line improves, we expect that to go down.
Okay, understood. And so what is the outstanding restructured book now?
Madam, I would not want to call it as a restructured book. While the book that we restructured, today the value of that is 85 crores. 130 crores was restructured. Today the value is 85 crores. But then today, after 1st of July, after 1st of August, they are no longer restructured because we had given it to a small portion of our customers, and that too we had given it only for a period of 4 months. So from 1st of August 2021, they were a part of my regular book. So unlike many of the entities who gave restructuring up to 31st of March 22, we didn't follow that. We gave only a payment holiday for a period of 4 months, April, May, June, July of last year. So if something had to happen on those accounts, it would have happened by October, November last year itself. So the value of that is 85 crores against the 131 crores that we had restructured. But I would not call it as a restructured.
So you mean to say it was mainly part of the stage 1 and stage 2 assets. Is that correct?
It would be stage 1, it would be S1, S2 and S3, all the 3 put together. Some of them have gone to stage 3. Not some, roughly about 35% has gone to stage 3.
35% is in stage 3.
It's in stage 3, but then they're reported that way. So therefore, I would not, and it's a part of my total, when I'm saying my NPA is X percentage, it includes this also.
Understood. So we don't expect any slippages from the restructured book part going ahead.
No. It is now, which is, I'm repeating, it's not a part of my, not a
Regular book.
regular book. And whatever will happen to the other part of the book, it will happen to this also.
Okay. Understood, sir. And sir, so going ahead, you said that this like in this quarter we saw soft NPA has been some 20 crores where it got reversed this quarter. So do we expect this number to improve going ahead? Since we expecting a lot of reversals in provisions, so do we expect this number to be mainly seen in Q2 or Q3?
Ma'am, this would be a continuous process, and we expect it to keep on reducing on a quarter-on-quarter basis. I mean, over the next 2 to 3 quarters, because some of it will possibly go back to zero. A lot of it will get collected in the normal course. Because we said that in the last 2 quarters, the collection from these accounts have been 36 crores and 32 crores respectively. So that collection will keep coming. Amounts will become due, and that will get, that will keep coming. And that will need to be collected, and because of the quality of those accounts, that people have defaulted but not, they are delaying but not default, I would say not paying kind of character, they are not that kind of character. So payments will keep coming up, and that will reduce this size of the book of the soft NPA.
Okay, understood. And sir, can you share the number of the market share number on retail sales that for this quarter? In March quarter it was 1.18%. So what will be that number in this quarter?
This year will be able to throw light on that.
Yeah, it is in the range of about 1.1%.
So has it decreased slightly quarter on quarter?
It would fluctuate a bit. What we are looking at is on the higher market share, but during the Q1 we'll recalibrate, rebudget, and certain locations will go slow, certain locations will go high. So it would fluctuate compared to Q4, but definitely as we go forward, the market share projected or budgeted is much higher.
So in this quarter, apart from Kerala, which geographies did really well for us? Which geographies saw better growth coming in?
So Karnataka is another state where we did well. Andhra Pradesh is, we have done well. East had been kind of normal, business as usual. North, a lot of locations we have restarted, which we had slowed down. We have restarted, recalibrated all our distribution network there. So
what will be the touch points pre-COVID level which we were at, and now where is that number currently?
Touch points, I think there is no impact on touch points as far as Q4 and Q1 is concerned. The decision is, which are the areas where we'll grow more and where we'll taper down depending on, how that area, the portfolio is behaving. So there is absolutely no impact as far as touch points are concerned. In fact, when I said that there are, during the festive we have, gone back to dealer points and kind of already taken a lot of commitments from them. It is a fact that already we are there, and we need to have the proposition in place where during the festive season, we get the maximum counter share. So there is no impact on touch points. Only thing is that, which one you want to grow and which one you want to kind of keep on as business as usual and be there in that area.
Understood. And sir, can you give any update on the co-lending arrangement that we are looking out for?
We are in the process of finalizing it. We will communicate that once we conclude on it.
Okay, understood. Thank you. That's it.
Thank you. We have the next question from the line of Uttam Purohit from Perfect Research. Please go ahead. Mr. Purohit, you may go ahead with the question.
Yes, sir. It's just a follow-up question. As we said, our retail disbursements have been in line with Q4. Can you tell me why our other disbursements were lower?
We are not, we are pursuing that in the second quarter, because even when we budgeted it, we didn't factor anything in that. We had budgeted it in the second quarter. Because first quarter, we tried to do the regular, because that is not our regular line of business. That is normally about 5% to 8% of our total disbursement. So we normally don't do it, and that is the reason it was not budgeted also, we didn't do it also. You'll see that in the second quarter.
Okay, sir. Okay, sir. Amazing. Thank you.
Thank you. That was the last question. I now hand it over to the management for closing comments.
Dear friends, thanks for being on the call with us once again this time. And definitely, times were very challenging in the last couple of years. With God's grace, I think while we had bruises across our body, I think we have still survived. And then in the current quarter, if there are any indication of things to come, we have possibly turned the corner, and I'm fairly confident that numbers will keep on improving quarter on quarter from here. We have gone through turbulent times, and while God has been there with us, we are happy that a lot of you, or all of you, have been with us as well. And that is what has been the most important thing for us, because we do things which we feel is right. And if we continuously get support from all of you, it actually makes us do things better. We are confident that second, third, and fourth quarter will be even better than the first quarter. We request for the continued support, and with God's grace, we are fairly confident that we will do very well in the next 3 quarters and the other quarters to come thereafter. Thanks very much.
Thanks for joining this call, and I think Vinod summed it very wonderfully. The tough times really teach us lessons which probably we would not have imagined during the pre-COVID levels. And today we are, we have a lot of learnings how to handle the situation when such black swan event happens. And we have kind of corrected and doing a lot of corrections in the way we do business so that we are profitable. And one of the quarters was Q1. And I think as we go forward, we have mentioned in the commentary as well that we have only good things to see ahead, and market also is supporting that way. At the same time, I think it is about how the support is around us, our ecosystem, from our lenders, from our vendors, from our promoters themselves, their support and help, and of course our entire team, which is intact, which drives this business. I think from all sides there had been very positive and motivating contribution from them. And only thing is that now as we get into the real action, I think, and as a team, we are confident that we should bounce back, and we've been telling that pre-COVID level is something what we want to benchmark, and we are confident that we'll be able to deliver that. And of course, our human capital is one of the greatest asset, and they have proved every time to us that during tough times they can really bounce back and show that super performance. With that, let me close my commentary. Thank you very much, and thanks once again for joining us.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.